What's good? What's good? What's good? What's good, everybody? How we feeling? How we feeling? How we feeling? How we feeling? Let me go ahead. Market sell off. Every market sell off. How we feeling? How we feeling? Let me send this out real quick. But y'all know the deal. Like always, I want you guys feeling good. Yes, yes, ma'am. Yes, ma'am. We should be feeling amazing. We should be feeling amazing. I want you guys to send this to 3 people who you want to see win in the market. I'm about to give you guys everything that you guys need for you guys to succeed in this market today. So I want you guys to send this out to a few people. But we gonna really get into it today because I want to make sure you guys are not shaken out by this market. I want to make sure you guys fully understand what's going on in this market, and I don't want you guys. The last thing I want you guys to have is fear or act off of the fear that we have. So, but send this out like always. I want you guys to send this out to 3 people that you know need to lock in with the market, and let me know how you guys are feeling. Let me know how you guys are feeling. Let me know how you guys are feeling. Feeling good? Amazing. We should be feeling good. We should be feeling good. I'm gonna even today. We're gonna definitely get it. We're gonna get some Q&A for sure. But feeling good. Got discounts galore. Exactly, for sure. Exactly, for sure. Yep. We're gonna go ahead and get started in a little bit, but I need you guys to send this out to a few people who you know need to lock in with the market. Send this out to send this out to some people who you know need to make money from this market. Right? We got a lot of opportunities in the market. We got a lot of we had some opportunities in the crypto market. A lot of price targets was hit in the community. We had about around probably 15 or so price targets were hit. So we definitely got some opportunities in the market for sure. For sure. For sure. But I'm gonna give it another minute and then we're gonna go ahead and get started like always. But how y'all feel about I want y'all take how we feel about Trump and Zelensky. How we feel? How we feeling? How y'all feel about that? We ain't gonna get too deep into it. I just want to know how y'all feel about it, right? Just let me know how you feel about it. We got okay, for sure, for sure. Let's go ahead and get into it. Don't even be supposed to do. I think show the lack of composure. Yep. I will say, um, The Art of War is an amazing book to read. Um, I think you gotta understand positioning and where you are versus what you need and what you're trying to accomplish. And you gotta be for sure chess moves being made. And you gotta be a leader of men. And you gotta put yourself when you're a leader, you gotta put other people above you and do what's best for the country. Um, so I think I think there are definitely some things that were said that kind of, maybe shouldn't have been said, but you got to always know the position you're in and do what's best at the end of the day. So um, that's kind of just my take on how I feel about it. But for sure, chess moves are being made for sure, for sure. But y'all ready? We ready? Let me know in the chat if y'all ready. Put some fires in the chat. You can say ready. Put something in the chat. Let me know that y'all ready because we're going to get into it today for sure. For sure. Y'all ready? Y'all ready? Y'all ready? We ready? All right, let's get into it. I appreciate y'all. I appreciate y'all. Let's get into it. So, first things first, I appreciate all you guys for coming like always. If you are new, this is called Alpha Investing. I'm Monte, aka King of Stocks, and this is Retail Investing Reinvented. So, for a long time, right, institutions, hedge funds, a lot of people around the world believe that retail investors could not invest or we could not keep up or keep pace with professionals. And my job to you, or my goal is to give you guys some information, some tools and resources for you to be able to do that. I want you to be able to make money no matter what economic environment we are in, no matter what goes on. I want you to be able to take care of you and your family no matter what. And we can do it in this market. So that is my goal to you. I want to give you an edge in the market every single week and give you some things, tools, data for you guys to look at and research so we are not emotional when it comes to this market. Right? We have to keep our composure so we can make great decisions. And a lot of it is just fear of not understanding, fear of not knowing. So I want to every week I want to let you guys know and give you guys some things you can look at so you can be up to date in this market. Now this segment is up or down. So all I want you guys to do, let me know if the chart is going up, is it going down, and should we be going long, meaning we're doing calls, or should we be going short, meaning we're doing puts? Let me know in the chat. Let me know in the chat. Let's go. No emotional trading, right? No emotional trading, right? Calls up. That's what I like to hear, right? And every week we should be it should be getting better and better and better. We should be understanding this, right? Now I want to ask you guys another question. Long-term investing, should we be buying this stock or no? Yes or no? If we're long-term investing, should we be buying this stock? You guys let me know what we think. And if you don't know, that's okay. Let me know. My goal is to help you, right? Let me know in the chat. Should we be buying this stock? I'm gonna put it. Let's see. I got a poll in the chat. So y'all let me know. Should we buy this stock long-term investing? Yes or no? Let me know in the chat. Let me know in the poll what you guys think. It's already trending up, so you may want to wait for a 20% swing. Wait for a pullback. Okay. Now, you guys know me. I'm gonna tell you every single time. If it's at a high, you gotta stay away from it. You do not have a lot of reward at the high. You don't. It's already at the high. So imagine, right? Because I always try to relate this to stuff in our everyday life. So imagine if you play basketball, you play the sport, or anything that you do. Let's say you did really, 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 really good at something, right? So let's say basketball, I scored 50 points in the game. The chances of me doing that again are slim, right? So let's say I was sports betting, right? You're not going to bet on someone to score 50 points if they average 20. This stock is at an all-time high. We have to be patient and we have to wait. Reason being, let's say you buy this stock now, and I'll make it clear to you, right? Statistic came out, buying the S&P 500 at an all-time high, you still had a great return. It's better than not investing at all if you held, right? But how are we going to feel emotionally if we buy this stock at an all-time high and then it drops 20%? So let's say Palantir is an amazing example, right? So Palantir was on a nice run. Now it dropped 30 or so, 33%. And now if you have that drawdown in your account, you don't even want to open it no more. You don't even want to look at your account when that's the time that you should be opening it and executing and pressing that buy button. So we would not want to buy here for a long-term investment. Now for this one, let me know if it's going up or down. Are we going long or short? Are we doing calls? Are we doing puts? And I want you guys to pay attention to the current trend. So look more so towards the right side of the screen, and that will let you know what we are doing because that is the current trend that's going on. So should we be going up? Should we be going long? Should we be going short? It's already trending. I'll wait for a pullback, swing, or retest. Okay, cool. Right? So with this one, and then if you guys don't know, that's fine. Let me know. Just put I don't know in the chat. Right? But let me know. Are we going long? We going short? Short. Consolidation says short, short. Cool. Puts. I don't know. I don't know. Hey, so I'm gonna let you guys know. I will be going long. I will be going long. Reason being, if you pay attention to the right side of the screen, right, and we pay attention to the most recent data that the stock has given us, it's trending upward. It's pulling back, right? But it's been making higher highs consistently. And so this stock is Tesla. This is Tesla. The reason I don't tell you guys the name of the asset, you shouldn't care what the name of the asset is. You should just focus on what the price is telling you. So if I pay attention to the most recent and current trend, we've been trending up, right? Now we are pulling back. We have had a considerable pullback, but the general direction of Tesla is still going to the upside. Now, if you pay attention to all of the history to the left side of the screen, it confuses you. So this is like you ever met somebody or somebody ever met you and then they meet you 5 years down the line and then they think you still the same person. It's like I didn't grow, I didn't change. I'm not the same, right? It's the same things with these assets. They grow, they change, they do better. Management gets better, operations get better, new products come out, right? So you have to look at the past history of the asset, but you have to make sure that we are paying attention to the current trend and what's happening right now, because that's most important. So great job, everybody, for sure. Great job. But I personally would be going long. Last one. Up, down, long, short. What we doing? Right, trading wise. Long. Are we long? Are we short? We doing calls? We doing puts? What we doing? What we doing? And then if you don't know, let me know in the chat. It's fine. Let me know. Mm, mm, long. Okay. If we don't know, that's cool. If we don't know, let me know. Maybe wait. Put. Put. So I want to ask you guys a question. Is the stock making higher highs or is it making lower lows? Is it making higher highs or is it making lower lows? And I can tell you just from looking at it, this stock has dropped around 35 to 40%, right? So it's down. So we would be short. But long term investing, are we buying this or no? Lower lows. So if it's making lower lows, we should be short. If it's making higher highs, we should be long, right? But long term investing, should we be buying this or are we selling? Buy, right? So now all the stocks that you're seeing in this market, all the stocks that you're seeing in this market are down. A lot of stocks that you see in the market right now are down. So guess what we should be doing? Opening up our account and executing. Or we should have already had the limit order set for the prices that from where we wanted to buy the assets at, and we should be just be watching, letting it hit, and be happy. Yep, you can wait to buy our starter position. Exactly. Great job. Great job. Now, let's get into it. So, I gave you guys a blueprint to how you need to look at the market. World conflict resolution, politics, economics, earnings, and innovation. I know it may sound old, but now I really want to break down to you guys how all of these things are moving the market right now in real time so you can get a better understanding. So, world conflict resolution. We got a lot of conflict, right? You got Ukraine. Joining Apex got me on point. Right, right, exactly. We got a call tonight. We're going to be getting deep into some stuff. But world conflict, right? You got China, innovation coming out of China. That's scaring us in America, right? You got Zelensky and Trump arguing, and you got the Ukraine and Russian war that's still going on. That's conflict, right? Those are things that are weighing down on the market. Politics. You got infighting in the White House. You got people who not agreeing with what's going on in the White House. All of those things are pushing the market down. Economics, inflation is ticking back up. I'm looking at I'm looking at the reports, and they got PCE coming out, and they raised the expectation. Well, how you gonna do that? At first it was 2.3%, then they raised it to 2.6%. Like, what happened, right? So we moving the goalpost to try to make everything look better when it's not. And then you got innovation. And if we're gonna be honest about AI, right? What companies are actually producing? What companies are actually producing? I know OpenAI is producing, right? Microsoft owns 49% of OpenAI, so by default they're producing. I can't think of I can't name you five I can't name you five companies that are really benefiting from AI. Truly, I can't. So all of these things are what's pushing the market down. You got tariffs. That's conflict. China saying that they're going to retaliate and do whatever they need to do to retaliate, right? So all of these things are pushing the market down. So I want you guys to look at these five phases and look at these five things and ask yourself, is the market going up or is it going down? And like pay attention to what is going on and ask yourself, will the market go up or will it go down based on these five things? These are the only five things that move the market. The only five things that move the market. Earnings have been okay, right? But to me, earnings don't matter. I don't really pay attention to earnings. It's temporary. It may move the market for a little bit or a stock for a little bit, but it's actually the stock and the performance of the stock is actually going to move if the company is executing. That's all it comes down to. World conflict resolution, politics, economics, earnings, and innovation. So these are the five things that we always need to look at when we are paying attention to the market. And that's going to allow you to know the direction of the market ahead of time before everybody else. So you don't have to panic or you don't have to worry. Let me know in the chat if it's, let me know in the chat if we spinning. We good? Everything good? Let me know in the chat if everything good. We should be good. We good? Okay, cool. So logical reasons to not invest, right? 2015, like this is why you got to go back and you got to study. You got to understand the market. You got to understand what caused the market to come down previously, so you can understand like when you have things going on now, it's exactly the same as it was years ago, right? But why is the market going to infinitely come down now and it hasn't done that any other time? So you got 2015 global stock sell-off. That was a logical reason to not invest. 2016, you got Brexit. 2017, you got major hurricanes. 2018, same thing we're going through now. The trade war, carbon copy. 2019, you had the, the repo market blow up. 2020, we had the pandemic. 2021, you got supply chain messing up because of the pandemic. 2022, you got rate hikes. And because of the rate hikes, in 2023, you had bank failures. 2024, you got AI bubble fears. And now we have tariffs. But if we pay attention to the bottom, 10-year return of the S&P 500 is 202.8%. You return 20% per year if you were holding the S&P 500 for the last 10 years. 20%, that's amazing, right? So there's a lot of reasons for us to not invest, but I need you to be diligent. I need you to stop having fear. One thing about the devil, he definitely gonna try, right? He gonna try anything that he can to shake you and get you off your square. And to be honest, it's the same thing with all these networks and all these other companies. They don't want you to invest. They don't want you to invest. The more people who are investing on their own is less people who are putting their money in 401ks, mutual funds, hedge funds. That's taken away from their market. They don't want you to invest. So if you watch CNBC or you read an article and they might spin it a certain way or make you look at it a certain way, it's all meant for you to put your money and your capital to them so they can invest it for you. But I'm here to tell you, you can invest on your own and make a lot of money. But we have to not be fearful. We have to be optimistic. We have to be patient. We have to operate in abundance, and we have to say our affirmations. I am calm. I am patient. I am disciplined. I am strong. I am consistent. I trust myself. I operate in abundance and I move with God. You have to constantly remind yourself why you're doing what you're doing. You have to. So anytime you get fearful, that's emotion. Anytime you get scared, that's emotional. Anytime you get super, super happy, that's emotional. We always have to come back to the logical reasons of why we are doing something. And that in turn will take the fear away. And we will be perfectly fine when it comes to the market. Now, if we pay attention to the market, it's been coming down, right? But when the market falls, I need you to get excited. I need you to have a smile on your face. So gold is down 3%, S&P is down 5, Apple is down 9%, Amazon, Microsoft, Google, and like Bitcoin. And price targets was hit at apex. Somebody tell me what the price of Bitcoin is now. I think it's what, 93,000? 93,000? Palantir, Coinbase, Ethereum, MicroStrategy, Dogecoin, Trump Media, Trump Coin, Fart Coin, Milani Coin. Them last four don't buy. Or them last six. But all the other ones is green. You got Oklo down, Hims, App Lovin, right? All of these companies, most of these companies on here are good, right? But now is the perfect time. If you love the company, buy them. If you love the company, buy them. If you did your research, you looked at the fundamentals, you have a reason to prove why that this company is going to be successful over the next year, 3 years, 5 years, buy them. I want you to know the decision. This is one of the best times that you're going to get all year to invest in the market. The best times all year. February is usually a down month for the market. We know that, right? You got hedge funds, institutions, they're making their portfolios look nice, taking profit so that those reports can look nice to their clients. That's a part of what all of this is, right? But when the market comes down, you got to get happy. You got to get excited. And you have to know that the investments that you are making today are the same ones that are going to make you a lot of money 3, 5 years from now. The same investments that you make today are the exact ones that are going to make you a lot of money in the future. We have to stop thinking in months, quarters. We have to start thinking over 3 and 5 year periods and really 10 to 20-year periods. So you have to know, like, the companies that you're buying right now are going to continue to do better and do well over the next 3 or 5 years, and you're going to make a lot of money off of them. But now that this market is falling, I need all of you guys to get excited, open up your accounts, and start pressing those buy buttons on some of the companies that you guys love. Now, short-term thinking is detrimental to us. I need you guys to think and understand what companies will dominate for the next 5 years. And if those companies fall, buy them. Buy them. Great job in the chat. Corey, he said now in September is normally a red month, right? Those are the times for you to buy. But short-term thinking is detrimental to us. So we're thinking about, oh, this stock is down now. But where is it going to be a year, 2 years, 5 years from now, 10 years from now? Like some companies that we're looking at, they're early in their life cycle. Palantir is early in its life cycle. CrowdStrike, early in its life cycle. Early in their life cycle. They ain't even been out 5 years, or maybe they coming up on 5 years now. They still early in their life cycle. They got another 5, 10 years of good growth. Meta has been around for around 15 years now since they IPO'd. Those we see what Meta is doing. If the company is amazing, they're going to follow the trajectory of other amazing companies. So we need to stop thinking so short term, and we need to make sure that we're thinking over a longer time horizon and over a longer time period. And when you think over a longer time period and a longer time horizon, nothing right now will matter. Nothing right now will matter to you. Nothing. Nothing. You got to know like the stocks are coming down and they're dropping. 6 months is it's gonna be good. A year from now, 2 years from now, we're gonna be laughing. We're gonna be laughing. Every time the market falls, I laugh, I get happy, I get excited. I'm so calm. Like we have to make sure that we stop having emotional connections to things that are affecting the market. People saying Trump is making the market go down. Keep making it go down. I'm happy. You giving me an opportunity to make money and invest and increase my net worth. So we should be happy. Despite of what you think of somebody, you have to be able to separate that and be able to be logical and execute on your behalf for you and your family. So again, we have to stop short-term thinking. And if the great companies that you love fall, buy them. And I want to show you guys the market will go up. So everybody talks about 2008. 2000 was way worse, right? We always remember like the most recent thing. So we remember 2022, we had the recession, then like 2020, then 2018, that was a trade war, then 2016 was Brexit. We dropped in 2014, then 9/11, right? 2008, 2000, 1998, 87, 78, right? It's recovered every single time, every single time. So why now will the market not recover? If you think that the market is going to come down and not come back up, you are betting against America. And I've heard many, many people with a lot of money say, do not bet against America. Warren Buffett has said that. A lot of people say that all the time. So we don't need to bet against America, right? I just need you to know that the market is going to continue to go up. Just like you as an individual and you as a person, you're going to keep growing and getting better and understanding more about life. No matter how old you are, how old you get, you keep learning stuff always, right? You learn more and more and more and more. The market is the same way. Anytime you invest in a company, you are tying your money to the future growth of that company. Hence, it will always do better and continue to go up over time, and the market will go up as a result. Now, there's a price to be paid for every increase in consciousness. We cannot be more sensitive to pleasure without being sensitive to pain. Now, there's a lot of ways you can interpret this, and there's a lot of things in your life you can apply this with, but I want to apply this to the market so you guys can understand this a little bit better. When you gain more consciousness about something in the market, or let's say FOMO, like a price came down and you missed it and then it ran up, and then maybe you panic bought and then the price came down again, right? I'm sure we've all been there, right? So once you learn a lesson or once you have more consciousness or something becomes clear to you or you make a mistake, you have a better understanding of what you can do, but you're going through that pain of what you did. And then it stacks on top of each other, right? So you're like, dang, I wish I would have bought that. I wish I would have bought that stock here. You know how much money I would have had? Or dang, I wish I would have started investing 5 years ago. You know how much money I would have had? Or dang, I wish I would have just put this money here that I had here and I just put it in the market. Like, so there's a price to be paid when you know more, right? So the more that you learn about the market, the more opportunities you are going to be able to see, the more things you are going to be able to understand, but you're also going to knock yourself sometimes and maybe be like, dang, I wish I would have knew this earlier. The price that you're paying for knowledge. That's all it is. All it is. That does not mean go make a decision or an emotional decision, right? Everything happens in cycles. You're always going to get an opportunity to make a lot of money in this market, but we just have to be patient. Okay. So China's terrific 10 is outperforming the Mag 7. Um, this is my thing. Anytime, like now they're talking about CVS is the best healthcare stock year to date. Go look at the 5-year chart of CVS. Go look at the 5-year chart of Alibaba, Baidu. versus the 5-year chart of Nvidia, Apple, Microsoft, Google, Tesla, Meta, and Amazon. They will give you any reason to stop investing. You have to be bigger than your fear. So again, I talked about this on the last presentation, I believe. They're gonna, oh, should I invest in China stocks? Should I invest here? Should I invest here? It's all meant to confuse you. If you invest in these stocks here from China that are now going up over the last 5 years, your portfolio is down, 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 down. You see how they try to spin the narrative? They try to spin it all the time, right? And everybody's worried about Nvidia when if the companies in China that are now going up are going to need more and more and more Nvidia chips, wouldn't that mean that Nvidia is going to continue to make more money? Blackwell already sold out. Even if in here, right, like Trump met with Jensen, and if he says that you cannot sell Blackwell to China, they still gonna buy the H100 chips. They're still gonna buy them. They still gonna buy them because they need them, right? So they will give you any reason to stop investing, but you have to be bigger than your fear. This is why we have to make sure we are doing the research. When you do the research and you get a better understanding of the market, you can read news and you can read articles with no bias. Every media platform has bias, whether they try to have it or not. Most of them do, right? But you don't need to invest in Chinese stocks. You can if you want to. I just advise you to look at the 5-year chart first and then imagine what your portfolio would have looked like if you were invested in those companies over the last 5 years, instead of us getting excited over something that's been happening over the last month, going back to short-term thinking and why we need to be thinking long-term. Now let's talk about it, right? So we had a bloody week on the left side. So you can see this is a 1 week performance. We can see tech was down, consumer discretionary was down, communication services was down. But guess what was up though? Healthcare, financials, industrials, right? So remember I told y'all how they was gonna take that money out of tech and they was gonna move it to healthcare, right? So we gotta, can't see. Let me see. Ooh, okay. Let me fix it. Let me fix it. Let me fix it. Um, okay. Let me know if you can see it now. Let me know if we good. Let me know in the chat if we good. We good? Good. Okay, cool. Cool, 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 cool. Cool, cool. Okay. So I want you guys to understand, like when one sector drops, you should be happy, invest in that sector. When another sector goes up, you should have already put your money there for you to make the gains. We as retail investors, we don't move the market. We can't move the market. Unless you have $1 billion, you don't move the market, right? My goal and my job is to put you on game so you understand what is going to happen and what's going to come in this market so we can be prepared. I want you to make money. I want you to. But this comes with understanding the game, doing our research, and really being diligent. Let's like y'all tell me though. Y'all think MicroStrategy gonna survive? I got it. I have it going to 220 and turning around there. But what y'all let me know. What let me know in the chat. Can you guys see me? Stream froze. Okay. Let me see. We good now? Let me know if we good. Y'all know YouTube don't be wanting me to talk. On me. Okay, cool. So I will say this. I want all of you guys to go look at the profit margin of MicroStrategy. Now I will say, will they make a lot of money from Bitcoin? Yes, they will. But what you're teetering back and forth between is basically, will you run dry before you get the return on the asset? Now, if you listen to, it goes back to show you how focused he is, right? So this is bigger than just micro strategy and Bitcoin. I want you to eat in. We good? It's trust me. Next week we ain't gonna be going through this. It's all good. We good? Let me know if we good. Okay, got you. They be getting on me all the time, all the time. I gotta watch what I say. I gotta watch what I say. Right? But that is the level of conviction I want you guys to have when you guys are investing in the market. You two know you can. ah, it's all good. It's all good. Trust me. If we keep going through it, we just gonna get on. We gonna get on Google Meet like always. It's all good, right? But I want you guys to have that same level of conviction when you guys are personally investing. Now, I need all of you guys to pay attention very, very closely. This is what's going on in the market. So there are some edges in the market. You have the law of resourcefulness. And this is from Warren Buffett, by the way, from Warren Buffett. These are his 5 edges in the market. So you have the law of resourcefulness. So this is investors who can leverage unique resources and information, time, or networks. So if you can get in a room that other people cannot get in, that is an edge for you because you can get access to information that everybody doesn't have yet. So that is an edge. The law of, somebody said in the chat, the profit margin for MicroStrategy is negative 252% as of December 2024. So it has probability. So it has, it's probably increased. Um, we'll get into it, right? We'll get into it. But you got the law of, as I don't want to butcher this word. We say asymmetrical, so asymmetry. So that's an edge that exists where information and analysis is unevenly understood in the market. And this is what I try to take advantage off of, right? So when everybody is in the market thinking like tariffs and stuff like that's going to cause, obviously it's causing the market to drop, right? But we have to know that ahead of time so we can be able to execute, set our limit prices and execute. And then you have the law of diminishing edge. So when everybody has the same information or the same skill set, the value of that edge declines. So everyone learns how to chart, right? Everyone learns how to do this. Everyone learns how to read financial statements. That edge diminishes. So way back when, everybody didn't know how to read financial statements. Everybody didn't know how to chart, right? So if you knew how to do that, you had an edge over people. Now the playing field is more level. Now you got the law of preparation. These two at the bottom are the ones that we need to take advantage of. The law of preparation. The more work that an investor puts into understanding and opportunity, the greater their edge is over their competitor. So can you outwork everybody else in the market? I told you guys, anytime that you trade, right? Somebody else is selling it to you. Anytime that you long-term invest, somebody else are selling those shares to you. If you sell shares, you are selling those shares to somebody else. You are saying every time you press a buy or sell button, I am smarter than you. I have more information than you. I am better than you, and I'm going to make money, more money than you off of the decision that you are making. That's essentially what you're saying. Stock market is not a friendly place. It's war. Why do you think everybody is in the market? Everybody is in the market. And then you have the law of psychological edge. We have to have these two at the bottom. It's a must for us. So you have to have emotional control. You have to be able to control your emotions. And there's an edge in the volatile market, like now, where everybody else is impacted emotionally and you are calm, you are patient, you are just waiting for everything to fall in place and you are still. In the midst of everything that's going wrong, you have to be able to be calm and just be still, right? And that is something that will give you an edge in this market. Now, here's a trading tip for you guys. So, if not seeing screen, okay, let me see. Google, why Google gotta mess with me? Do I gotta promote them their stock? Yeah, Google. I love Google. I like Google long term. I definitely think Google is gonna do well. You know, they got their quantum chip coming out. I think they're gonna do well. That what I got. That's what I gotta do. Let me know if you guys can see my screen now. Let me know if you guys can see my screen if we good. Yeah, Google to the moon. Google to the moon. I like Google. I like Google. I think Google is good for sure. For sure. For sure. But trading tip. So even trust me, and all the things that I'm sharing with you guys, I actually follow myself, right? And I want you guys should definitely follow Steve Burns. Amazing trader, amazing. He gives a lot of free game, so definitely follow him for sure. But get more aggressive when you are winning, and get more defensive when you are losing. So if you are on a losing streak, right, you can trade with less capital. You can take less trades, simmer down, take more time to study, right? Because if you're on a losing streak, everything trends, right? So when you're winning, you're going to continue to win. The trend is going to be win, right? But when you're losing, it's the same thing, right? If you're on a losing streak, that trend is going to continue to go down until you break it. Now, obviously, eventually you are going to break that trend, right? But until you do, while you are on that losing streak, you have to get more defensive because, again, the goal is to survive and protect your capital first, right? You got to make money and then don't lose it. And if you do lose it, don't lose a lot of it. This is why I encourage all of us to have stop losses. And there's going to be times, trust me, there's going to be times where you make a trade, you get the direction right, but you get stopped out. Like you do a trade, you get stopped out, and then it goes in your direction. Happens a lot, right? But you have to stick to your system and you have to stick to your plan. If it's worked before, why would it not continue working again? If it's proven successful, you have to stick with it and stay with it. You don't need to change anything. You don't need to switch indicators. You need to adjust. So changing would be, oh, I'm going from EMAs. You guys see the same moving averages on my chart every week, right? Now let's say I switch to Elliott waves or something else or RSI, right? I said in the chat, good old stop hunt, right? They definitely be stop hunting for sure. But you don't want to do that. Adjusting would be, let's say, going from out the money options to in the money options. That's an adjustment. Strategy still the same, right? But you're adjusting to the market. So don't change anything, just adjust to what the market is doing. I want to ask you guys, if the next 1,000 days looked exactly like yesterday, would you be closer or further away from your dreams? From your dreams, from your goals, from the person you want to be, from the monetary goal you want to hit? Would you be closer or farther away? Now, yesterday may have been your rest day, but let's just think like generally what you do on a day-to-day basis. If someone was to watch you, if someone was to watch you on a weekly basis, if someone was to just watch you for a week, would you be closer or farther away from your dreams? I love what I'm seeing in the chat. Closer. That's what it should be, right? And I'm not talking about the days where you're down or the days where you just may not feel it. I'm talking about the overall consistency of what you do on a day-to-day basis. Because what you do continuously is what you're going to become. The work that you put in now in all phases of life is not just with the market. So emotional intelligence, I'm big on. Have to work at it. Mindfulness, I'm big on. You have to work at it. Creativity, I'm big on. You have to work at it. Obviously, I'm big on the market, right? You have to work on it. You have to work towards this thing to work towards the things that you say you want. You have to. It's no way around it. There's no shortcut. There's no cheat code. None of that. For what you want, like I want you guys to pick a goal and then lay out the blueprint of how to get it. So everybody on this call, I want you pick a percent. Let me know in the chat. Let me know in the chat. What percent do you want out of the market every single year? Apex, everybody in Apex, yeah, y'all should know. Y'all should know, right? But in the chat, from long-term investing only, what percent do you want each year? And don't pay attention to anybody else. Just pay attention to you. But we are a team. We are in this together. I want you guys to put what you want to return and what you want to get out of this market per year. Don't have any limitations. Don't think about what the average return per year is. Whew, that's what I like to see. Corey said 80%. I love it. Destiny, 60, 70%. I love it. Fabian, 85%. I love it. 40%. I love it. I love it. All of this is outperforming the market. I love 75%. I love it. I love it. 100%. I love it. I love it, right? Now, what I want you to do, the percent that you want, and I want you guys to base this percent off of what you want. So if you have $100,000, what do you want to make passively with compound interest on top of it each year? 30 to 50%. I love it. You can do it. Everything that you all put in the chat, you can do it. But what I want you to do, now that you have that percent that you want to hit per year, I want you to figure a way out how to return that percent. Do your research, surf the internet, and figure out how you need to return that percent. In Apex, we got a call tonight, right, at 9, and I'm going to teach you guys how to outperform the market every single year. But I want you guys to, whatever percent that you have, find a way to get it. So if you want 80%, you need to go online, look, you need to look at the charts, you need to study, look at balance sheets, look at whatever you need to look at so you can reach your goal. Like, it's cool to have goals, it's cool to have aspirations, but we need to start putting in plans to figure out how we're going to get what we want out of life. Start using my stop loss and take profit when I see profit. There we go. Right? That's one step. Every morning routine should include some FinVids and research. Exactly. Right? But again, if the next 1,000 days look like yesterday, would you be closer or further away from your dreams? Like, that percent you want is going to be based off of this slide right here. The last 1,000 days. Do they look like yesterday? And are you going to be closer to hitting that percent from the work that you're putting in now? Because us as humans, we underestimate our own compound interest. Do you know how much more money you will return over a 10-year period if you just got 3% more than the S&P 500? Just 3? And it compounds and compounds and compounds. And you create something special, something that you don't even believe in, something that you didn't even think that was possible. Right? You can do it, but I want you to go figure out how. Now let's go ahead and get ready for this week. Security companies reporting this week. I'm super excited about that. On Monday, we got manufacturing PMI, construction spending, ISM manufacturing, auto sales. So that's going to let us know about the car market, kind of manufacturing, some construction going on. So again, it's companies like Caterpillar, Carvana, GM. I don't like that company, but car company. It's like, this is going to let us know, give us also some insight about inflation. Like, I'm gonna tell you guys now, you should We can look at these economic indicators, but who do you know in your circle has bought a car, a new one? Anybody know anybody that's bought? Because I may be wrong. I may be wrong. I don't know no one who's bought a new car. Bought a new motorcycle. It's all good. It's all good. We're gonna get it back in the market. It's cool. It's good. I don't know that many people who bought a car. So we can look at these economic indicators, but we're the everyday people. You can just look around and you can see for yourself, for sure. Right? But Tuesday we don't have anything. Wednesday you got ADP employment. Again, if they're using a company for economic data, you might want to look at that company and just see how they make money and see what they do. But you got services PMI, factory orders, ISM services. Thursday is gonna be important. You got jobless claims. Like we gonna see how everything that's been shaken up in the White House and kind of how that's impacted jobs. But you got durable good orders, GDP second revision. That's important. Pending home sales is very important. It's going to talk about the housing market, and from what our president is saying, he's talking about a reset of the housing market. So it's definitely going to be some volatility and turbulence there for sure. Then Friday, you got a jobs report, unemployment rate, and U.S. hourly wages. So another kind of maybe volatile week based off of the economic data that we're going to have for sure. But earnings on Monday, you got Okada, that's what I call it, or OKTA, cybersecurity company. Tuesday, you got Target, Best Buy, AutoZone, CrowdStrike. Wednesday, you got Foot Locker, Marvell, RGTI. We're going to look at RGTI on the chart. Thursday, you got Kroger, Macy's, AVGO, and Costco. Some good companies there. And then Friday, we don't have any earnings at all. This week, I'm short NASDAQ, short ES. I'm long the Dow, long the bond market, and now I'm long Bitcoin. Right? Changed overnight. But I'm long Bitcoin now. But we got another eventful week with a few key, players reporting